Hello, everyone. Welcome to today's episode. Today is Monday and marks the beginning of a new week. So before we go to the chart, let's check fundamentals. And looking at the week, on today, Monday, we have no news. Tomorrow, we have CPI at 12:30, and we're expecting positive news. On Wednesday, we have no news. On Thursday, we have PPI, core retail sales, and unemployment claims, all at 12:30, and also Fed manufacturing and Empire State Manufacturing Index, all at 12:30. On Friday, we have consumer sentiment and inflation expectation at 2 p.m. These are the fundamentals we have. So let's quickly go back to the chart. What is happening? Let's go to weekly time frame. Now, if you look at weekly time frame, you can see that on April 14th, April 21st, April 28th, and May 5th, all these candles closed below 33.25, indicating a strong resistance at the 33.25 level. All right. If you go to daily time frame, this is what happened. You can see clearly that we had a double top formation on daily time frame, and after the double top, the market dropped, and how the daily candle closed also indicate more sales. And if you look at it very well, you can see for sure that, of course, the market opened few hours ago and it dropped 500 pips. These days, the way the market always behaves is really crazy, honestly. It's really crazy. So we had 500 pips movement. So what is likely to happen next? What is likely to happen next? If you go to H4, you can see how the H4 closed and how this one has sold off massively, which is super, super, super crazy. All right, super crazy. Now, you can see clearly that on H4, the market has tested this demand zone and you are seeing a rejection. How far can this market go? Can it really push to the 32.92 zone for a continuation drop? Or it can come all the way to 33.07. All right, 33.07 for a retest for the market to continue on pushing up? Or is it going to reverse right from here and keep pushing up? Now, these are the questions we are supposed to be asking ourselves and make decisions based on that. All right. Yeah. So let me take you to H1. Let's try and find some meanings in H1. Now, if you look at H1 clearly, you can see that, of course, we have a zone of which the market has tested nicely and it is pushing right to the upside. Now, the question is, how far can this market really go? But I'm anticipating a push all the way to the 91, 92 zone, and also a push to 0.7. If it breaks 0.7, then we are going to test the 25 levels. And if we break the 25, then the market is going to reverse and push more to the upside. All right. So this is what I see actually. All we have to do is to exercise patience, watch, and see to the very end. So by New York session, we are going to see if the market is going to respect the 90 zone and reverses, or it will break the 90 and go all the way to the 07, or breaks the 07 and go to the 25. All right, so what you need is patience, watch, relax, and see to the very end. All right, 30 minutes, what is it saying? So 30 minutes has a breakout. There was a 30-minute breakout right here. But due to the fact that H1 has no breakout there, the market can hit that breakout in 30 minutes and drop again. So we are going to experience something like this. Then it can break to the upside, come here and push all the way to the 07. And from there, probably we can experience a massive push to the downside like this. Something like this can happen, but we just have to watch and see to the very end. All right. This is Pip Hunter here, and the Pip must pay. Make sure to manage your risk very well because you have no idea of which trade hitting your TP and which trade hitting your stop loss. It is only risk management which can keep you active in the game for the long run. And until then, I will see you in the next video and have a nice day.